Welcome back to the new video. I will tell you here my macro model, how it works and how you can made money from that macro model. It's simple. Just one thing that you have to remember is in macro, price simply flush towards the drawn liquidity, but you need that model inversion, CISD, or you can see breakout structure. That's the thing which give you confirmation to enter. Now I will tell you some example here. See here, there is a macro open, price rejecting from the fair value gap, clearly breakup structure, drawn liquidity is lower, low resistance liquidity, 1 hour unmitigated fair value gap is a strong drawn liquidity, simply 1:1. That's it. Now you can see there is a strong breakup structure at macro open, price pullback. You can enter at this red candle, that is a bearish candle, put SL below this swing low, and you can target simply to the Asia high, which is a strong drawn liquidity. And as you can see, another trade here, you can see there is SMT, strong SMT. SPX took these highs, and so there is no reason to price go higher. You can see there is a breakup structure with a strong displacement here, and you can enter clear break-on point, and after that price simply flush towards the drawn liquidity, but we targeted this protected low, so we got the break even here. You can see macro open, here's the breakup structure came, there is a low resistance liquidity, and we didn't got entry because our entry point is this. You can see this is our entry point, and price does not came back and it directly flushed towards the drawn liquidity, and we got our target. Remember that we didn't target this protected high because this is protected high, it's rejecting from daily fair value gap, so our target is this swing high. Look at this swing high, this is our target, so that's the good trade. Now the A plus trade that we took here is that there is a sweep of liquidity here, point of interest at higher time frame. You can see clearly inversion drawn liquidity. I entered at this macro open, you can see there is a macro open here, and I entered at this point, and as you can see price simply flushed towards the drawn liquidity, and I booked my TP at this point, almost 1:2 trade. You can see here there is a clearly low resistance liquidity, drawn liquidity, there is a breakup structure. You can enter at this point, put a sell below this swing low. You can see price goes higher and start consolidating. And remember one thing here, if price start consolidating, exit it at a break even point, because when A plus setup form, price simply flush towards the drawn liquidity. If it's consolidating, that means price doesn't want to go hunt that liquidity. Simple. And remember that trade in that index, SPX or Nasdaq, trade in that index where drawn liquidities exist. That doesn't mean you have to always trade in Nasdaq or anything. You have clear drawn liquidity, whichever asset gives you clear drawn liquidity, trade there.